thanks to Mani to definitely shorten that biography. It's definitely too long. Morning, everyone. Just a disclaimer. I am suffering from a very bad spate of flu. So if you can't hear me clearly, if I sound very, very funny, please indulge me. I didn't want to miss the opportunity. So my role today is just to cover a very exciting development in the acceptance arena called mPOS, or mobile point of sale. And because of my voice, I'm going to use a lot of video to help me and make the session a lot interactive. So before going into the actual detail, being a listed company on the New York Stock Exchange, just a disclaimer from our legal guys, please, I might be making forward-looking statements, so don't rush out to buy some Visa stock after this. And whatever information shared is purely for information purposes only. So I'm going to start off by just going, what is mobile POS? There's a lot of hype globally, particularly started in the US and now coming into our markets. Then going into the different solutions that we're seeing in the market and the business models emerging. Then I'll move into what Visa is doing in this area to ensure that solutions that do come into the ecosystem are safe and secure. Aligning with Tim's comments earlier, safety and security and maintaining the integrity of the payment system is our utmost number one. So we're paying very close attention to that. And lastly, I'll share with you how we see this new innovation, how it will transform the acceptance landscape across the continent. So let me start with a video that talks about POS evolution. So that video just describes the evolution of the point-of-sale terminal versus the evolution of the mobile device. So from a card acceptance perspective, we probably started accepting cards about 30 years ago with, if you can still remember, the zip-zap machine and vouchers. And in some countries in Africa, that still exists today as a backup mechanism. But one of the major step changes has been moving from that device onto the actual point-of-sale terminals, making transactions electronic and making merchant settlement in a next-day settlement. But if you look at mobile devices in the last 15 years, and moving from the initial Nokia 3110 to the mobile phones that we have right now that has computer processing power just as any other laptop or large device, we need to leverage it. We need to leverage it in a way to help us build acceptance. Across the continent, we have about 360,000 merchants right now. In terms of mobile phones, we have 650 million mobile phones. So our strategies have always been, how do we leverage the mobile network to build acceptance? So this term, mobile mPOS, or often known as, mobile POS, often known as mPOS, is essentially a mobile phone with an accessory or an adapter to it, as you can see in these pictures, to process card transactions. And they range from different price points, from as low as, in the US, $6 or $7 for an actual adapter, up to about $150. And they've really created a catalyst for mobile acceptance in markets across the globe. And so from a global perspective, this trend started in the US. by companies I think Alan referred to Square. Square recruited 850,000 merchants in less than 2 years. And this year they'll process $14 billion in volume. That's more than South Africa. I mean, that's more than most African markets in the continent. That trend, however, is definitely moving across into Europe and in Africa. And as a South African working for a global company, I'm very proud that there's South African companies here that are innovating, and we're going to see probably the lowest cost chip and pin solutions coming out of South Africa, and that's very exciting for us to see these developments. So why all the hype between mPOS? And I know some of the terminal manufacturers are here, but if you do a comparison between the traditional point-of-sale device and your mobile point-of-sale device, I've been in Australia for the last 3 years, and after that, about 18 months here in Africa, and speaking to about 50 acquirers, terminal costs range between $350 up to $1,200. I have an acquirer in Mauritius that's paying $1,200 per device. And then we need to have a look at access to electricity. In some of the markets that we operate in some of the informal townships, access to electricity is a challenge. Access to fixed line telephony is a challenge. And when you add all those things up, it gives a bank a lot of fixed costs that creates high underwriting criteria. So Alan spoke about return on equity. If you speak to banks in South Africa, generally if a merchant doesn't do under 10,000 Rand a month turnover, you're going to struggle to get a point-of-sale device. And the reason is not because banks don't want to, is because of the underlying costs that they have necessitate those underwriting criteria to have a return on equity. So if you look at the right-hand side, these mobile point-of-sale devices leverage the consumer's handset. And at a $30 to $50 price point, we call it, it's a throwaway cost. Our vision is to have any small, medium enterprise to use these devices. If you look at the bottom, the last two, security and compliance, whilst we embrace innovation, we need to remain focused that security and compliance is not compromised in any way. And we're very focused on ensuring that things like encryption, so adhering to the PCI, so payment card industry standards, adhering to EMV standards. We had an opportunity about 18 months ago where we allow MAGS-type devices in this market, and we took a conscious decision to say no. Our acquirers have invested heavily in EMV technology. 92% of the POS infrastructure in South Africa is already EMV compliant. So allowing anything that's MAGS-shop would just contaminate that. So we concentrate and focus on making sure that the basic security and compliance guidelines are met with. Here's a flavor of some of the solutions that we're seeing. On the top hand, you'll see the super low-cost adapters. You would see some of the providers in the media recently. Thumbs Up had made an announcement with AXA. They are due to launch in coming months a very low-cost mPOS solution. These solutions are roughly in the $50 range. They connect via the 3.5mm audio jack. The 3.5mm audio jack is the most universal port in any mobile phone. So we like that, we like its ubiquity. And it will support all transactions, so EMV, MAG, Stripe, and PIN. At this stage, it's working generally with the smartphones. And yes, that is a concern for us because when you go down market, yes, there aren't that many smartphones. But I must say that the mobile operators have really come to the party. You're getting smartphones right now. You can get a Samsung running Android smartphone in the $85 bracket. So what we're seeing is partners, mobile operators, banks, partnering with these organizations and packaging smartphones because a smartphone is an aspirational buy, so they're packaging the smartphone with the card acceptance solution and selling it together. In the bottom section is the more, I'd say, Bluetooth, more the devices that look similar to traditional card acceptance devices. So it's a necessity that connects to your mobile phone via Bluetooth connection, and it supports chip and pin. And I think there's certainly a place for these devices. And from a consumer perspective, the adoption rate will be a lot quicker, I think, because the transaction looks very similar to that of the traditional point-of-sale devices. But this is just to give you a flavor of what are the solutions we're seeing coming into the market. Ivory here in South Africa has launched. They already have a live solution called NetBank, and that pilot is underway. And we're going to see a lot more of those solutions. We're very excited to see a significant amount of merchants coming into those programs. So what is Visa doing in this space, and why are we so interested? We fundamentally believe that this is going to help us and support our the growth of acceptance. And there's three areas that we're focusing on. One, creating an enabling environment. So there's some of the rules that were written 30 years ago in our rule set that might not be relevant to these devices. An example is for a low-cost payment, issuing a paper receipt. Electronic receipts are becoming very popular right now, so we've adapted our rules that if you cannot provide a paper receipt, then you can provide an electronic receipt via text message or via email. And that's being very popular in some of the markets we're operating in. Secondly, in terms of prioritizing markets and looking at how we can get these players and bring in these players into the ecosystem in a much faster basis and certifying them so acquirers know that when they're dealing with a specific partner, these partners can understand, these companies are dealing with providers that have already been certified. So I'm going to ask our sound engineers to play the video that just encapsulates what this program is about.
The power to pay and be paid easily and securely. It's no longer a convenience for the few, it's a basic right for everyone. Visa is making it easier to adopt mobile payment acceptance solutions so mobile point-of-sale providers can get their innovations to market sooner. Acquirers can expand their business to a whole new class of merchants, and merchants can give their customers easier, more secure ways to pay. To deliver on these benefits, Visa is providing clear and consistent guidelines to clarify requirements for implementation of mPOS solutions. Also, Visa is building reference applications and providing tools to speed up the development process so that merchants can build new solutions that integrate with CyberSource and Authorize.net capabilities. And finally, the Visa Ready Partner Program is being launched to provide device manufacturers, software developers, and acquirers with guidelines and resources to get their solutions approved according to Visa standards. For mPOS providers, this means faster time to market and access to the Visa acquirer and merchant communities. For acquirers, it means peace of mind. Visa Ready confirms that the solution meets these requirements. And for merchants, Visa Mobile Acceptance can mean more payment options, a simplified pricing structure, and fewer missed sales. Visa Mobile Acceptance. It's a win for everyone.
Go back to the presentation. So, in line with that, what we're doing is we're opening up a kimono to the actual technology providers and saying these are the standards that you need to comply with. And we want to help you accelerate getting these programs up and live and running. Can you put my presentation back up? Very quickly, we're not seeing this take up only in the bottom end of the market, so bottom of the pyramid in terms of small, medium retailers. It's more in we see a lot of traction in the enterprise space. So in India, you're finding insurance companies adapting these solutions. They're having 80,000 of their agents going out there and accepting payments. If you look at in the US, Nordstrom and Square has been also deploying these solutions. I have a video here on Square and why they went down this path, but I won't play it in conscious of time. But Square is now processing 80 million mobile payments per week in Starbucks right now. And that, if you look at the total volume, we're projecting to hit $14 billion. this week. I'm not going to go to the business model, but just to draw your attention in terms of the pace of change. In the last 2 years, Square has gone up to $14 billion, and in literally 24 months, they've reached $14 billion. If you look at the other fastest growing payment options, PayPal, some of the Visa prepaid products, the Visa debit products, the closest has been 5, 6, and even on our debit product, 11 years. And the signal is that consumer adoption to mobile payments is at a much, much rapid pace. And this is testament to the fact that consumers are taking to this. So lastly, in closing off, what does this mean for us? We've done some analysis. Over the last 5 years, our card acceptance growth has grown at 6%. We think that in the 3 markets that we're going to focus on, this is just based on Kenya, Nigeria, and South Africa, we'll add 160,000 merchants to the 350 over the next 3 years. So we call this the African game changer. And I look forward to being here next year, sharing some of the success and results with you guys. Thank you. I know that there's quite some time pressure. I'm going to be here over the next day, so if you ever have any questions, you're welcome to get me around the corner and ask you questions.
We have time for a question.
Oh, we do? Okay.
Yep. Hi, I'm Previn from the Mauritius Commercial Bank.
Hi.
Hi, Previn. I think this is a really interesting product in terms of the mobile POS, but I just want to know from you if Visa has done any market study in terms of the acceptance of this product on the African continent. I know it's going very well in the States and in Europe as well. And do you believe that this product will eventually replace the traditional POS that we're using now? And maybe you can share your experience on that.
Great question. So in terms of, we have done some research with some independent consultancies on the African continent, but it's been more focused on what should the product look like in order to meet our requirements. And the results of that research has been that we need to focus on chip and pin, we need to maintain the integrity of the existing infrastructure that's been put in place. In terms of consumer adoption, I think it's still early days. Netbank is the first to launch now. We think if you look at mobile acceptance and mobile products, like in Kenya with M-Pesa, we're confident that consumer adoption will be there. In terms of whether it will replace the traditional point-of-sale device, I don't think so. I think in a multi-lane, a supermarket, grocery, or fuel environment, you'll still need a hardware infrastructure to process high volume of transactions. I think that acquirers right now, when they have a lot of their devices deployed in unprofitable merchants,